Good morning and welcome to Bazaar Morning Call. I am Anuj, with me Prashant and Sonia. We are in for a very important day because it's one day ahead of the weekly options expiry, and most importantly because it's the Fed event day. But of course, we will react to it tomorrow. As of now, what has the market priced in? A 75 basis point rate hike, which is in the price, but the market action, at least in India, suggests that even 100 perhaps is something which may not derail at least the Indian rally. But there's a global risk off, which is clearly visible across asset classes, commodities, cryptos, dollar index, and bond yields. So for how long can we keep ignoring the global risk off really is the big question. The SGX Nifty is indicating that we'll start somewhere around the 20-day exponential moving average, which has been huge support for the market. Let's see if that gets defended or not. Guys, hi, good morning.
Hi, morning
morning,
Anuj, morning Prashant. I like that title, right? Fed up of the Fed. I mean, all of us are pretty much. That's all we've been talking about for the last, 2 months, 3 months, maybe even 6 months.
More like a year, right?
What is the Fed going to do? And now I guess it's coming out of our ears. But in any case, you won't have to wait too long to find out what the Fed is going to do. There are 3 burning questions for me. One is this buy and dip strategy that has worked really well in the Indian markets. Is that intact? Second is, has India actually decoupled from the US markets? And the most important, does the Fed outcome really matter for an Indian investor? I mean, the equity cult is back in a big way in India. Retail accounts, as we said, 100 million retail accounts, in August. The question is that whether the Fed does 75 or 100, will the buying stop? And it may not. Just look at the kind of outperformance that we've seen in India already. The Nifty is up 2% this year, while almost all developed markets are down about 20% apiece. Yesterday as well, both FIs and DIs bought in the cash markets. There was buying of almost 1,200 crores by FIs. DIs bought as well. Yes, the US markets are under pressure, and yes, we may open in the red, but that may give the bulls an opportunity to buy. More than the rate hike, I think it's the Fed commentary that assumes importance on what the Fed would do here on and what the trajectory is as far as both inflation and growth are concerned. So I'll watch out for that. But as we negotiate all of those cues, our own markets are hitting new highs. So a long list of large cap stocks sitting at fresh 52-week highs. And most of them are, domestic, economy-facing consumption stocks. So whether it's ITC, Ambuja, Maruti, TVS Motor. That's the big question, right, Anuj? This buy on dips is something that has worked. Does it really matter what the Fed does?
No, it does matter, of course. When everyone starts saying that perhaps it does not matter is when you'll have a reality check, Sonia. Look, I mean, if US falls another 10-15%, at some point we will catch up. But for our market, this just been very strong sort of market texture. Yesterday I was making a point that the big data to watch would be the FI positions in futures and options, where you have aggressive shorts, and that shorts are beginning to throw in the towel. Now look at what happened yesterday. There was huge short covering. In fact, I think this is the single largest day of short covering. 20,000 contracts net covered in a single day by FIIs. What that means is that the net shorts are now down to 25,000 contracts. I think this was well over 75,000 at the peak of FI shorting. In fact, when the series started, FIs were 82% short. That's down to 61%. But that's still short on 61%. So maybe there's more short covering left. I think there are a couple of levels to watch out for and defend. Normally on days like today, first, of course, you'll keep an eye on yesterday's low, 17,744. If the SGX Nifty is right, and that's a big if, I might add that's a big if. In that case, that will go. And if that happens, then, of course, the SGX Nifty low and the 20-day exponential moving average, the 20-day simple and exponential moving average, both are now placed at 17,690. So 17,690 is your risk-reward equation. And you get closer to 17,690, my sense is longs would come back in this market and try their luck with a 40-50 point stop loss, because that would be a good 4:1 or 5:1 kind of risk reward if the Nifty has to defend the 20-day exponential moving average and go towards that 18,000 mark, which is what the basic impulse of this market has been, to buy the dip. But buy the dip where? So I think today perhaps the market gives you that opportunity where you straight away open at a very strong and a very significant support level. And I think the other way to play that is on the bank Nifty, because that's really been very strong. It's not even broken its 5 or 10-day exponential moving average. Forget about the 20. And those averages are placed at 41,050 to 40,700. And if the market is charitable and gives you that sort of zone, my sense is that is the zone in which you will see buying. And look, the FI buying is so strong now that all these financial especially and the domestic economy facing stocks may continue to do well, may continue to see an uptrend. Of course, with the premise that there should not be complete capitulation in the global market, because that's something which perhaps could derail. But Prashant, morning, there's a new angle that you're covering this morning. What's happening with Russia?
Just because there is too much of Fed and we were fed up of it. But it might be significant as well, to be sure. We don't know. So this is something which is going to happen in the next 2.5 hours or so. So Russian President Putin is expected to sort of release a pre-recorded speech. Now, this is according to Forbes Russia, and they're citing Kremlin sources. By the way, if you saw the social media, etc., last night, it was a buzz because the speech was supposed to come last night, and then it never happened. I mean, no explanation was given as to why the speech never came, but this was expected to come last night. But now they're saying that it's going to come at 10:30 a.m., and this comes at a time when it's being widely reported that Russia is basically losing ground to Ukraine. I mean, the Ukraine counteroffensive is being successful, etc. There's one more thing. In Russian-held territory, in many sort of regions in Ukraine, there are referendums going to be held, where now, you basically call for a vote and a referendum, and the region officially joins Russia. What reports say, and this is not me, but what reportage is that this may be an escalation in conflict, because Russia wants to give itself, enough sort of whatever legal cover to call any further escalation as an attack on Russia itself, and give itself the powers to kind of respond much more aggressively. So we'll find out. We don't have to wait very long. But if it is that, and if this is a serious escalation, then it will mean a lot of things. By the way, I mean, there were no significant cracks on the back of this in global markets. The Russian stock index sold off big time. Wheat futures, for example, jumped 8%. But apart from that, here and there, not very much. But it could turn. So keep an eye on that. Now I come to, of course, the Fed, which we've been kind of talking about. So last night, again, I mean, more of the same. Stocks were down by about 1%. Yields back up. So the 10-year is back above 3.5%. Technically, it heads straight to about just under 3.8%. The 2-year, by the way, is at about 4%. Thankfully, one big component for India's macros, oil remains helpfully low at about $90 a barrel. The dollar is surging. It just fell short of making a bullish outside day. So it came off a little bit, but still above 110.25 on the DXY. And, what's coming out of Europe is being largely ignored, although we've got a couple of central bank decisions this week from there. But extremely hawkish commentary from ECB's Lagarde as well, reiterating the determination to bring inflation back to 2%. So commentary from around central banks and around the world, very, very hawkish and very, very determined, focused on inflation at this point in time. Sonia.
Absolutely. I think the commentary is most important, right? They're getting into restrictive monetary policy territory. And I think this is the first time that the Fed has been tightening rates for so long to fight inflation since the 1980s. And this will be the highest that we've got if it's a 100 basis points rate hike. It was unimaginable about maybe 6-8 months ago, right? But it's coming through now.
But the quantum, if you compare it to the 80s, I think they hiked rates by some, I think 10%, 10 percentage points.
Okay.
This is what, I mean, from zero, you've gone to whatever, 2.5 or something like that, right? I mean, 2.5 to 2.75.
The quantum is not as much as what it was perhaps way back in the 80s. Okay. But nevertheless, I mean, restrictive monetary policy territory is something perhaps we need to get used to from an equity market standpoint as well. And that's the reason why the US markets have been under so much pressure since the start of the year. But let's do one thing. Our market is a different beast altogether. So let's tell you what you can expect. On the equities front this morning, Jonathan Garner of Morgan Stanley is our expert of the day. He says that they have repeatedly emphasized that patience will be rewarded by the end of this month. He says this will become the longest bear market in terms of days in the history of Asian and emerging market equities. He adds a recent Jackson Hole speech by Fed Chair Jerome Powell and the mid-September upside surprise in the US CPI will likely accelerate a move down towards their bear case target in the near term. He says this raises the likelihood that a classic capitulation trough could form most likely in the month of October.
Okay, let's get you some money market views then. Kunal Sudhani of Shinhan Bank says the US dollar index gears up for another hawkish play of the Fed today, taking rounds around 110 plus levels with the potential to test last high of 110.79. He says the US government bond yields extend their bullish route to fresh multi-month high and oil prices have cooled off. He says it's also important to keep an eye on Chinese yuan as well. For the USD INR, Kunal says 79.60 should be a support, while somewhere around 80 will be a resistance.
And on the bonds, Neeraj Gambhir of Axis Bank says that the market has started the week on a negative note on the back of continued rise in the global bond yields. He said the FOMC rate decision and forward guidance will be the key driver of bond yields over the next few days, and expects the 10-year benchmark bond yield to trade in a range of 7.25 to 7.35% for the week.
Okay, all right. So that's basically what we have in terms of views across asset classes. Mikshil Das is Asia equity strategist at JP Morgan. He's joining us from the sidelines of the JP Morgan India Investor Summit. Mikshil, thanks very much. Great to have you with us here on the program. Thanks for your time. I mean, the question here in India, of course, I'm assuming that you guys are also getting at the conference is, you know, at what point does the global sort of risk-off start to affect India? Or do you think we've got a bit of Teflon coating now? What's your sense?
It never lasts very long, right? Like if global equities start to fall 10, 15%, there's no way that any market will survive in that sort of an environment. So that's just a global perspective, right? Like most of the conversations we've been having around India has been much more focused on the India context. And as many speakers from the government and industry at the JP Morgan India Investor Summit have said, the long-term trajectory of India's growth has become much more clear post-pandemic, and versus the rest of the world, it looks especially attractive. So we've been grappling with this issue of very strong macro performance versus very high valuations in the India market. And all through 2021, we were basically ignoring the valuations. But right now, it is starting to look a little bit stretched.
So, hi, good morning. So, in that context, would you say that the risk reward now perhaps is not favorable in Indian market? And can we continue to sort of outperform and completely ignore the global risk off?
Yeah, so I don't think that's going to be possible. So as you've probably noticed in the past, India market had been following very closely the S&P 500. And in fact, this was true of all EM Asia ex-China markets, very closely following the S&P 500. Since early August or mid-August, we've started to see that kind of diverge, but India has held up much better than the rest of the other markets, including the S&P. And typically, this sort of divergence wouldn't tend to last. So I would expect some catch-up there. And just looking at the India market dynamics, right, you have a situation where earnings are well above trend and are starting to get downgraded at this point. You have valuations which are at 22, 23 times on a trend forward PE basis, which is 2 standard deviations above, and ERPs are at basically 20-year lows. And keep in mind that excess liquidity in India in the domestic economy, which has been a big support to the market, is starting to face some pressure because you're starting to see credit growth pick up while deposit growth is slowing down.
Okay, well, for the Indian markets, you said that the long-term trajectory of Indian markets has become very clear now. Do you see this as some sort of, the start of a multi-year bull market in India, if we are not in the midst of it already? I ask because, we were just discussing how the retail demat accounts in the month of August hit that 100 million mark. So the equity cult has come back in a big way in India. Your thoughts?
There are 2 parts to this. Firstly, I think from a macro perspective, you're absolutely right. We are already in the midst of a multi-year bull market. But from a retail participation perspective, actually, we are probably closer to the end of very aggressive participation. And the reason I say this is because when you think about household asset allocation, there tends to be, with India's growth and development, there tends to be increasing allocation towards capital appreciation. And the problem has been in India in the last 10 years, the property market has gone nowhere. And as a result, all the capital appreciation, money has been put into the equity market. As the property market starts to pick up, which is our expectation, you could actually see the retail fervor in the equity market start to slow down a bit.
Okay. So if you're saying that India is now in the middle of a multi-year bull market, what kind of themes do you see take center stage now? I mean, so far it's been the old economy facing, themes, whether it's financials, IT. Of course, IT is not old economy, but now there's sort of, a change. There's so much disruption happening. What do you see as the big trends over the next, say, 6 to 12 months?
And this is part of a global trend where value has outperformed growth since the early part of 2021. And we think that this is going to be a multi-year trend. So we still like the financials, we still like the materials, energy companies, including in India. And we do think that that's probably going to be a place which does well over the next 12 months or so. But over a longer term, when you talk about 5-10 years, right, obviously these disruption areas become very important. India has seen a large amount of VC interest over the last 5 years. And eventually those companies will come into the stock market, and that will, peak retail interest as we go forward as well. So it's really going to be quite diversified. You have consumption growing via urbanization and growing incomes. You have value doing well, and certain parts of these value camps in the market doing well. And then you have the long-term growth performance via the disruption sectors, which will come through in multiple years as well.
So, is geopolitics still a risk for the market, for the global market? This morning we're hearing some talk about, escalation in Russia-Ukraine situation. Of course, there's China angle all the time, but do you think that at the margin could still be a factor?
So India has, in fact, by our calculations, been the biggest beneficiary of capital rotation out of China. And this is not just from a portfolio perspective, but also from an FDI and manufacturing investment perspective, where we have started to see manufacturing in India, supply chain relocation in India pick up very aggressively. And that is something that we think will be a long-term trend over multiple years. From a portfolio investment perspective, there's been two phases where we saw in the initial part of rotation out of China in really the first half of 2021, we saw a lot of money going into India. But after that, we've seen massive outflows out of India. And only in the recent month and a half, I would say, we've seen foreign capital coming back into India. And this, again, has a very strong angle of geopolitical diversification out of China. The Russia-Ukraine angle, I would say that from an India market perspective, has less relevance. Only to the extent that oil prices, what happens to oil prices will obviously be very relevant for the Indian market.
Okay. By the way, Mikso, any thoughts on the big deals which we are seeing here in India? I mean, we've seen one of the largest in the cement space recently, and there's a lot of talk. There's a lot of talk that a lot more is coming. Any thoughts?
I mean, I couldn't comment on specific stocks or sectors, but I would say that this sort of M&A activity is not unnatural. What we're seeing from a very top-down perspective is that the cost of capital is going down in India, or the risk premium on capital that you pay in equities has been going down in India. And as a result, we are starting to see these sort of investments. And I would expect that this way of growing via M&A continues to be a long-term trend as well.
This restrictive monetary policy territory that we're getting into as far as the US Fed is concerned, right? I mean, it doesn't stop at the 75 or 100 basis points rate hike. We're expecting perhaps more cautious views and multiple rate hikes through the course of the year. How do you approach equities as an asset class? If you do have some powder dry, do you deploy it right now? Do you stay a bit cautious? I'm asking overall, not just for India. And what would the preference be between emerging and developed markets?
So I would say that actually, from a Fed perspective, the market is currently pricing in 75, 75, 50 in the next 3 meetings, right? So we'll get the first 75, perhaps 75 tomorrow evening, and we'll see how it goes from there. But I think the key thing to keep in mind is that the market is already pricing in these sort of hikes. And if you listen to the commentary from the Fed, they are incrementally moving away from fighting inflation today to trying to stop inflation resurging next year. So as this happens, and as we get the very large hikes priced into the market, you could actually be in a situation by the end of this month or going into October where you start to see the Fed becoming less of a headwind for markets. So valuations could end up re-rating a little bit into October, helped also by seasonality. But of course, at that time, we also expect some earnings downgrades across global markets. But that could kind of end up being a valuation positive versus earnings negative. So depending on the market and the specific dynamics there, it could be a positive or a negative.
Mikso, thanks a lot for your time today and have a good summit. That's Mikso
Thank you.
From the sidelines of the JP Morgan Summit. We need to take a break. The global markets are still a bit iffy. There's, of course, this wait for what the Fed might do this evening. Our market, of course, has been an outperformer, and on days like today, normally does not fall as much. In fact, sometimes does not even break the SGX Nifty lows. So we'll keep an eye on that, and we'll take a break. We'll come back and we'll address some of the important stocks that we are tracking today.
Welcome back. Plenty of stocks to talk about as we head into trade this morning. So let's get straight to that. Our entire research team is joining in. Anuj, what are you looking at today?
Well, I'm just deviating a bit from banks, which I've been talking about almost on a daily basis. Yesterday, for the first time after a long time, I saw a bit of a breakout in pharma stocks. Now, I don't know if this is just a one-off, but then I looked at some stocks which are interestingly placed. I think first is Syngene, where you had that block deal as well. And I think yesterday it made or almost made some kind of a golden cross with 50-day moving average coming over 200. Extremely weak stock, but again, oversold stock. First signs of buying yesterday. And the other is Abbott. We don't talk about the stock a lot because it's very expensive stock. I mean, expensive in terms of PE as well, but in terms of the absolute number as well, 18,000. So normally not very sort of actively traded stock. But yesterday it was one of the top gainers, and it crossed 200-day moving average with ease. So I think these are a couple of names that I'll keep an eye on. But let's go across to Vivek. He's, of course, watching out for Triveni Turbine and Triveni Engineering and TFCI as well. Vivek?
Well, good morning. Whole host of stocks on the radar. Today, the Triveni Twins, Triveni Engineering as well as Triveni Turbine will remain in focus. So what we are expecting is that in Triveni Turbines, where Triveni Engineering holds a 21.85% stake, we understand that out of this overall stake, 11.85% stake is expected to change hands via a block deal. And we understand that the remaining 10% that Triveni Engineering holds will be bought back by the promoters of Triveni Turbines. Now, the particular price band for this particular block deal is very narrow. It's between 226.7 to 229 rupees a share, and we understand that Triveni Engineering is looking to raise almost 1,600 crore worth of capital from this particular block deal proceeds. The current market cap is close to 6,500 crore only. Now, unlike the name suggests, Triveni Engineering is in the sugar business, and the company does have a history of rewarding shareholders, especially via the buyback route. Now, when you're talking about Tourism Finance Corporation of India, again, 13% equity yesterday changed hands via multiple block deals. Two large funds actually have made a complete exit. When you're talking about India Opportunities Fund, they sold their entire 9% stake in the company, and Tamaka Capital Mauritius too exited their entire 2.68% stake in the company. GIR Dairy Farming Products is the one that has bought quite a significant bunch, and a whole host of other names that are not yet declared on the exchanges because of the less than 1% that they've bought in this particular block deal.
Okay, thanks a lot for that. So we'll keep an eye out on these stocks. I'm watching out for three stocks this morning. There's M&M, Swaraj Engines and Kirloskar Industries. Now, M&M has gone ahead and acquired additional 17.4% stake in Swaraj Engines from Kirloskar Industries for a sum of about 300 odd crores. Now, with this acquisition, what happens is Swaraj Engines becomes a wholly owned subsidiary of M&M. The stake that M&M has in Swaraj Engines will now rise to 52.1%. Now, this is, of course, we're expecting M&M to be in the green, but this is also a big positive for Swaraj Engines because now M&M takes complete control of Swaraj Engines. In any case, Swaraj Engines manufactures diesel engines for Mahindra tractors itself, and the earnings have been very good. In the year gone by as well, the revenues went up 15.5% at about 1,138 crores. And if you see the last 3 years, the turnover has improved substantially for Swaraj Engines. So I'm going with green over there. And for Kirloskar Industries as well, it's the holding company of the group. So I'm going with green on that stock.
Okay, going with green on Swaraj and Kirloskar as well. Sonia, you're watching out for SpiceJet as well. It looks like there are some serious problems here.
Oh, it's been problems galore for SpiceJet, right? The latest is that the company is now sending 80 pilots on leave without pay for 3 months. And the reason they're doing this is in order to cut costs. Remember, the company has been trying very hard to raise funds, and that recapitalization plan has just not gone through. And if you look at it, the losses for SpiceJet have piled up over the last many years. I mean, just look at that graph, right? So it's now sitting on a loss of almost 1,700 crores. And there are plenty of problems that SpiceJet has been undergoing. It delayed salaries for the second straight month in August. Its CFO resigned recently. The auditors cast some doubts on, SpiceJet remaining a going concern. The accumulated losses are very high, and a couple of their planes were deregistered by the DGCA as well. So this news of sending 80 pilots on leave without pay just comes as additional negative, just goes to show that the balance sheet continues to be extremely stretched for SpiceJet. So I'm going with red over there. But Vahishta is joining in. She has some more stocks in the news for us. Vahishta, over to you.
Hi, thanks for that, Sonia. First is Zydus Life Sciences, where the European Commission has granted the marketing authorization for Nulibry for injection. This is the first therapy for the treatment of patients with MOCD type A. Now, Nulibry was the first FDA-approved therapeutic which was owned by Bridge Biopharma and Sentinel Therapeutics. Moving on to Central Bank of India, wherein the RBI has taken Central Bank of India out of the PCA framework, which is the prompt corrective action framework, and the bank is now allowed to expand its branch network and grow the book faster. The last stock is Yes Bank, wherein the bank has approved the declaration of JC Flowers ARC as the winner of the Swiss challenge process, and this for the transfer of approximately 48,000 crores worth of assets. Now, Yes Bank has approved the necessary investment for acquisition up to 19.99% equity stake in JC Flowers.
All right, thanks a lot for that. So plenty of stocks to talk about. Here's a quick recap of our top stocks. With positive news flow, there's Triveni Turbine, Triveni Engineering, TFCI, M&M, Swaraj Engines, Kirloskar Industries, Zydus Life Sciences, Yes Bank and Central Bank of India. While the only stock that has negative news flow today is SpiceJet. In any case, that has been under pressure for a while. Okay, well, let's get a quick handle on what's happening in the world of commodities. Manisha Gupta is joining in. Manisha, it's D-Day today, the US Fed meet. But tell us, what are you tracking in the world of commodities?
Oh, well, Sonia, ahead of the D-Day today, we have all the commodities actually open in the weakness there. You have the gold prices trading at a 29-month low. Silver has declined 2% overnight. Natural gas prices have continued to decline as well. We saw 4.5% of a cut overnight for this one. And the crude prices have been under selling pressure as well. Also because the IEA has forecasted a weak demand in the fourth quarter. And even as China has eased COVID restrictions, markets do believe that the higher interest rates everywhere else may slow economic growth. Same is the case with the base metal prices, with the US dollar holding around 20-year highs. You have the copper prices trading at a 3-week lows. Aluminum is trading at a 17-month lows. Steel is trading at a 5-week lows. Zinc at a 2-month lows. And that goes on. Even rubber prices trading at a 16-month lows. You have cotton prices trading at a 2-year lows. So all industrial commodities, even the agri commodities, are today trading on a very weak note ahead of the US Fed.
All right, Manisha, thank you very much for that. So that's commodities in focus. We'll take a very quick break here. Up next, we'll connect with Deven Choksi of KR Choksi for some fundamental stock analysis that's coming up. And also later, we connect with Priyanka Chigurupati of Granules Pharmaceuticals to discuss about the company's buyback plans and reports that PI Industries is looking to buy out the promoter stake there. We are back in just 2.
Welcome back. Well, the S6 is indicating a mild downtick at start, 75 points down, almost 0.5%, 17,720 is what you have. The 20-day exponential moving average is 17,690. That's also the 20-day simple moving average. So let's see, how things move. 17,700 also is that trend line mark that we've been pointing out. So a lot of, levels or important markers around that 17,700 mark. Deven Choksi is joining us from KR Choksi Securities. Deven, hi, good morning. Thanks a lot for joining us. Deven, first thoughts on both ACC and Ambuja now after the big rally that we have seen. Yesterday, of course, there was an exchange announcement that the promoters or Adani Group has pledged entire shareholding. How do you approach these names now?
Good morning. Well, I think purely from the fundamental merits of the cement sector as a whole, I think the scenario looks, I think, pretty convincing. On one side, the demand situation, I think, is remaining extremely promising and I think continue to be robust. In selective pockets, I think you're also seeing the higher amount of, I think, the realization also, I think, is coming in. And as a result of which, I think most of the companies which have seen up till now, I think the challenge in form of getting the margins up, I think that is now probably getting addressed out of this particular demand scenario, which is really quite violent. Having said that, I think ICICI Ambuja kind of companies have been continuously doing relatively better on the volume front as far as the production is concerned, irrespective of the takeover by the Adanis. But at this point of time, also on the operational front, they are doing reasonably well, I think, from all the capacity utilization parameters. The cost of production also remaining under control, which is a good sign for the margin protection in the coming quarters and all. So fundamental story remains intact. I think the growth opportunity remains, I think, quite sound as far as I think the outlook is concerned. For say ICICI Ambuja, two companies together, I guess I think the outlook remains promising under the new management. However, I think in the initial period, probably due to the higher amount of capital infusion, etc., these companies could possibly have some amount of its own challenges due to the capex mode in which they are entering into. Wouldn't like to comment more on the pledge of shares done by the promoters, but I would think that the prospect remains, I think, extremely convincing. Maybe current run-up is in anticipation of that. Maybe some cool down could be expected out of it. The per-ton valuation at this point of time remains, I think, probably at the highest level. In the
Right. Right. Devin, hi, good morning. Do you track Swaraj Engines by any chance? The news that Mahindra is acquiring an additional near 18% stake in Swaraj Engines. Any thoughts at all?
So, Prashant, I think not really that I think we are tracking this company per se, so I think it would be different from making comment.
Okay, got that. Devin, hi, good morning. I wanted your thoughts on Bharti, because that stock has had a slow and steady climb to a fresh 52-week high. Does it have any fresh triggers here on, and is the risk reward still favorable for an investor?
Yes, Sonia, good morning. Well, I think one of the positive things which all of us are aware of is continuous increase in the ARPU as far as I think the realization is concerned, and that is adding into the profits for the company in coming quarters. Having said that, on the other side, the capital program for the company continues, and I think that is going to be demanding more and more amount of resources. The challenge would be how exactly I think the capital infusion versus the reward coming into the shareholders in form of higher profits will have to be seen going forward. The opportunity-wise, the segment looks, I think, quite convincing because of the implementation of 5G. So from that perspective, both Jio as well as Bharti remains in the forefront as far as I think the opportunity goes. So I think one would not probably call it, I think, a fresh buy per se at this point of time. But given that fact that I think only two companies, Jio is under Reliance Industries, of course, and Bharti is a separate company that are existing as far as I think the investors are concerned. What of an idea I'm not counting at this point of time enough as far as I think adding into the portfolios. But the global investors probably would like to give more allocation to the stock. And that's where you are seeing the higher amount of I think activity including the all-time high in the stock price.
Okay, well, we have another stock on our radar right now, and I do request you to listen in, Devin. Granules is the first corporate that we're speaking to on the show. There have been a lot of reports about a stake sale, buzz doing the rounds for a while, reports that PI Industries is looking to buy out a promoter stake in Granules. And in more news, the company has also approved a buyback of up to 250 crores at 400 rupees a share. To discuss all this and more, Priyanka Chigurupati, the Executive Director at Granules Pharmaceuticals, is with us. Priyanka, I think every time you join in, this is the first question we ask you, but I'm going to ask it nevertheless. As they say, there's no smoke without fire, right? At some point in time, is a stake sale coming?
Absolutely not. Absolutely not. This is not even something that we're thinking about right now. I'm not sure why there's so much fire continuously and why there's so much discussion on this topic. I just want to deny it over and over again because there's really nothing happening right now.
So there's nothing brewing with PI Industries at the moment? No talks? Nothing
Absolutely
at all?
not. Absolutely not.
At the moment, Priyanka, or forever?
Well, we never know forever, but I don't even see this happening. And as a promoter, as somebody involved with the promoters, I don't think this is not happening at all.
I think that's pretty clear then now that nothing at all at this point. Or I mean, as you say, can never say never, but it's a no. So tell us about the buyback then. 250 crores in size, 400 rupees per share. What will promoter stake go up to? Could you give us some sense around this? Some guidance around this? Yeah.
I will have to get back on the exact promoter stake details, but I do expect this to be fully subscribed, and we should have this over the next couple of days.
Okay. Can you give us some guidance on how growth is shaping up for you? You had said that a 20% compounded growth is what you're looking at on the revenue front. In Q1, that's what you had said. But do you hold on to that? And what could the growth triggers be?
The numbers will still, we hold on to the numbers. We are performing better than we expected. Our prices, the costs in the market for most of our key products have seen a sense of stability. And we do expect our overall revenue and profitability to go up.
Okay. Priyanka, good morning. A couple of balance sheet related questions. What's the outlook on your net debt? And in terms of cash flows, where you had, previously suggested that, you're looking to improve that. A word on both these, parts.
Sure. The cash flow, I think, will continue to remain a focus. We have seen an increase in focus. You've seen the numbers increase over the last couple of quarters, which is why we're also doing the buyback at the moment. So ultimately, the focus has been and will continue to remain on positive cash flow.
And on debt, 613 crores, I think, is the debt on your books. Any plans to reduce it?
It will go down for sure, but I don't see this to be too much of an issue because our finance costs are pretty reasonably low. And, a lot of it has to do with working capital, primarily in all our markets where, especially the US, where working capital requirements are quite high. And of course, you've seen an increase in working capital also because of an increase in stocks that helped us perform much better in the US market, which is our biggest market over the last couple of years. So I don't think, while focusing on net debt is certainly very important for us, I'm not too concerned about that because it's only facilitating growth for us as a company.
Just to clarify, you're saying that, I'm just coming back to the first question, right? You're saying that at the moment there are no discussions as well with PI Industries, not for a complete exit, we're not talking about that, but some sort of a partial stake sale.
Sorry to cut you off, but this is, again, we keep waking up and hearing all these rumors, and I actually called the chairman. I was like, I didn't hear we're doing this. It was a joke. It really was a joke that was running in our family. Okay,
fair enough. Just wanted to ask you about the supply issues that you were facing in one of the inputs for paracetamol as well. Has that issue been ironed out?
Supply has definitely improved significantly. Costs have seen a decrease, but they haven't reached the level they were at pre-COVID. But we have seen a lot of stability and an increase in supplies, and we will see that to be a very positive thing for us going forward with maintenance of prices, etc.
I think at the end of the first quarter, Priyanka, you said that for paracetamol, the selling prices will also come down sharply. Has that happened?
The selling prices will come down, not sharply, but they certainly will come down to make sure that we pass on the increase in, the decrease in costs, just like how we have said that we will be passing on an increase in cost whenever that happens. But again, as always, there is a time lag between the decrease or increase in cost versus when we see that in the pricing activity.
Could you, is it possible at all to kind of talk about the selling price? I mean, some guidance on how you see this evolve, pricing basically?
I can't really give an overall guidance. That's primarily because every customer is different, every market is different. But all I will say is that we've emerged stronger as a player, especially for actually all our molecules, because of our ability to supply over even such difficult times during COVID.
Priyanka, thanks a lot for joining us and thanks for clarifying once again those rumors and the market buzz. Devin Choksi is still with us. Devin, any view on Granules? It's a stock which has been very volatile, and these rumors keep surfacing, and the management keeps denying them, of course. But purely from the business point of view, what's your view on the stock?
Well, I think, Anuj, going by the numbers that the company has published in the last quarter, and also I think looking at the business of the company, I think this year probably appears to be, I think, a relatively far better year compared to the previous year. I think all in all, I think against 3,200 crore odd kind of a revenue book of last year, I think this year I think should end up on a yearly basis, I think somewhere around 4,000 crore plus. And I think on a around less than 400 crore worth of profit, I think that they earned last year. As against which I think the company should be earning in the vicinity of around 625 to 650 crores kind of a profit. Going entirely by the numbers that the company has given, and I think the call that they did. So given that kind of a situation, I think we are clearly seeing, I think, a sharp rise in the profit of around 35-40%, and I think a revenue rise of around 25-30%. So it looks, I think, at this point of time, and as far as I think the investment opportunity goes.
Okay, well, I think it would benefit our viewers if we pull a 2-year chart of Granules, right? The stock has had gyrations, but it has effectively done nothing. 2 years back, the stock was around the same amount with 320, 330, and it is at 300 rupees right now. So it's not participated at all in the rally. But Devin, in the broader markets, you know, the star of the show in the auto space has been TVS Motor. It hit a new high yesterday, and the stock is now up 75% this year. How does the risk reward look now for an investor?
Well, I think most of the news probably I would like to believe if they have been priced in. Of course, I think the complete journey towards electric vehicle thing is basically exciting more number of people, and that's why a higher amount of allocation of money is also actually into the respective stocks. And that's why probably I think you're seeing sharp rallies into the stock prices. I would believe in the fundamentals. The strength remains, I think, pretty strong. Any correction in the market and the price correction in the market particularly, I think would be a good opportunity to buy into stocks like TVS. They're even really promising story.
Do you own or have you looked at any of these footwear companies, which are all the rage now? There's, Metro Brands right on the top of the list there, but there are others as well, Campers. The laggards are names like Bata. Any thoughts at all, Devin?
No, Prashant. I think I wear footwear, not owning stock.
Rather wear them rather than own the stocks. All right, got it. Devin, stay with us. We'll take a quick commercial break and we'll come back. I mean, yesterday was another strong day for names like Metro, etc. Metro was up 9%, Metro Brands, that is. A lot of stuff, other stuff to discuss as well. We'll take a quick break here, but we'll also get our technical trading ideas up for you. Mitesh and Sudarshan will be with us with those in just a bit from now.
Welcome back. Sudarshan Sukhani and Mitesh Thakkar now joining us to make sense of the market technicals. Gentlemen, good morning. Sudarshan, looks like if the SGX Nifty is right, we'll get a bit of a gap down. Would you buy it?
Yeah. Good morning, Anuj. I would still be a buyer. You know what the Nifty is doing is it's in a very narrow trading range, roughly between 17,500 and 18,000 for the last 6 weeks. So if we come towards 17,500, that would be a buying opportunity. I don't think I would like to buy in the morning itself. If the Nifty comes closer to 17,600, then keep a 100-point stop loss and buy. Now, that may not happen today. If it doesn't happen during the trading hours, I would avoid the trade completely. But a dip towards 17,600 would be a buying opportunity because we have a stop loss and we would be at the lower end of the trading range. The same applies to the Bank Nifty. It's outperforming. It's not in at that much of it's not in a trading range, but we still need a dip there to 40,700 or whereabouts. Then we should consider buying. So the trade is still to buy, but on a large dip.
Okay, 17,600 on the Nifty, and you said 4,600 on the Bank Nifty, Sudarshan?
Right, on the Bank Nifty.
Okay, fair.
40,700.
Okay, 40,700. Mitesh, good morning. How are you approaching trade today?
Morning, Anuj. I think the outlook is very similar, that we are still in a range, and 17,500 for me also remains a very important support area, and 17,850 is the upper end of the range. So I think closer to about 17,550, 570 is where my buying idea would be, with a stop below 17,500. Similarly on the Bank Nifty, and that's been an index which made a fresh high and is giving a pullback. Anything closer to about 40,900, 40,850 is the buying zone, and 40,300, 350. I mean, that's the support area. So just keep a stop below that zone. I think eventually the Bank Nifty will see much higher levels. It's only that this consolidation is seeing the Bank Nifty chop around between 41,600 to about 40,500. And therefore, I think 40,900, 850 becomes your buying zone.
Okay.
Okay, let's talk about individual stocks then. Sudarshan, plenty of stocks hitting new highs in the large caps. So tell us, what are you looking to buy and sell today?
Yeah, because today is maybe a slightly difficult day. I have buying and selling ideas both, mainly in mid caps. Federal Bank is a buying opportunity. It's been showing strong relative strength. Momentum is rising again after going into a consolidation. It's on the verge of a breakout. Buy with a stop under 120. Voltas is an intraday short. This stock has been in a bear market of its own, doesn't follow the Nifty at all. It's an intraday short with a stop above 923. PVR is also an intraday short. If you see the chart, it's on the verge of breaking down from a significant support level. That's not good. So that's an intraday short with a stop above 1792. And finally, ONGC is an opportunity. It's a buy on dips opportunity. It's in a trading range. There's nothing to recommend it except for the fact that this range could break on the upside. It stopped falling. So ONGC is a buy.
Okay, ONGC is a buy. Mitesh, what are your stock calls?
I have more of buy calls today, despite the fact that we might open slightly lower. Cipla, I think, had a big breakout and was a recommendation earlier as well. Now can be bought around 1,085. Keep a stop below 1,060. 1140 would be the target here. Similarly, Page Industries was also a recommendation earlier. Very big breakout, good swing high and price and volume action there. It's a buy around 50,000, 50,100 mark with a stop at 49,500 for targets of 51,250. IOC is a sell though. Keep a stop at 71. Look for targets of 65. And a buy on Apollo Hospitals around 45, 45, 45.50 with a stop below 4,500 for targets of 46.50.
Okay, thanks a lot for that. Well, let's move on. Chandan Taparia is also joining in to give us some cues in the F&O market. Chandan, good morning. What are you looking at today?
Good morning, Sonia. Nifty has stuck in a range from last 14 trading session in between 17,442 to 18,088 zone. And middle range of the entire band is near to 17,777. So technically speaking, it's moving in between 300 points plus and minus to 17,777 mark. So it requires a decisive range breakout to commence the next leg of rally. But major trend is positive and every major decline is being bought. So we will continue to be with bullish bias with buy on decline stance with major support of 17,442 and expecting market to again head towards 18,088 and then higher band. But for intraday point of view, we will closely focus at immediate support near to 17,667 marks. Now looking at the Bank Nifty, that is comparatively more strong. It has support near to 40,500. Use the declines as a buying opportunity for the next target towards lifetime high of 41,850 level. Now looking at the individual stocks, we have positive on the selective auto name including TVS Motor, Eicher Motor. Most of these stocks are doing well with positive price action and open interest activity. So as a recommendation, we have buy on TVS Motor. This stock has given a consolidation breakout of last 10-12 trading session with open interest activity. The stock is already trading at lifetime high territory with positive sector approach. So recommending to buy with stop loss of 1,055 and expecting it to head towards the new lifetime high move towards 1130 level. Second trading idea, that is from the pharma space. After a long time, we are witnessing some rebound in selective pharma name as a defensive bet, and Cipla is among the top performer in the entire pharma, which is trading at a multiple months high and trading near to the lifetime high territory. So recommending to buy on Cipla with a stop loss of 1,060 and expecting it to rally towards 1135 kind of level. Last trading idea, that is on the sell side on the IOC, recommending to sell. The stock is trading at 29 days low level, continuously making lower top, lower bottom with call writing and the short built up. So recommending to sell on IOC with a stop loss of 72, and this stock has potential to go down towards 65 levels on the downside.
All right, Chandan, good speaking with you. Thank you very much for joining us with those trading ideas. 7 minutes to go for the pre-open session. Let's just take a quick look at once again at what the SGX is indicating, and then we'll take a break and come right back. So, I mean, the cut deepened a little bit more from being down 50. We're down about 74, 17,721 or so. We'll come back with Ankur Rudra of JP Morgan, who's going to be joining us from the sidelines of the JP Morgan Investor Summit to discuss the IT sector and his views. Ankur, of course, has downgraded the sector some time back. We'll ask him his latest views in a bit.